So thank you very much. It's very nice to be here, and thanks to Arjun and the team for having us all. It's funny. When I got the email last week from Arjun about participating, I said sure right away, and then I thought about what we were going to do. I was like, I don't know if I really want to talk about that. Right? That's a tough thing to speak about. How are we different than our colleagues? But I think it's fair, right? I mean, I think I listen to 30, 40, 50 pitches a week, and I'm doing the same judging, right? I'm trying to determine between all of you entrepreneurs out there, how are we going to allocate our limited capital? How are we going to make decisions between many of you? And I had the privilege of listening to a bunch of pitches this morning, which were fantastic. So it was a really great exercise for me to think about why is Firstmark different? So I'll just tell you a little bit about Firstmark, and then we'll jump into what I came up with after a week of thinking about it, and hopefully it's a good answer. But so Firstmark Capital is based here in New York City. We invest throughout the U.S. and have a couple of international investments as well. Uh, Very Series A focused, generally writing checks that are $3 to 5 or $6 million at the Series A level. Opportunistically, we'll write a seed stage check of 500K, $1 million here in New York as well. We invest 50-50 between serial entrepreneurs and first-time entrepreneurs. I think that was interesting data to find last week too. And a lot of things were apparent. The splits between the verticals that we invest in, a lot of things are globally headquartered here in New York City. So retail, financial services, insurance. I spend a lot of my personal time at Firstmark in education technology, which I have a passion for. A lot in digital media, those kind of industries that are globally headquartered here in the city where we feel like we have a competitive advantage. And then a handful of investments are on the West Coast, more in the kind of the digital media, the sexier sides of things, I suppose, the Pinterest and Lumosities of the world, to drop a few names out there. And I guess sex, so following the guy from Ashley Madison, that was tough as well, right? So no business like that, unfortunately, although I heard he's doing quite well. But, when I thought about what makes Firstmark different, I virtually everything that I thought about ended up in one place. And it really ties to my experience with the firm. So I joined back in 2009, and I've been there for about 4.5 years now. And the firm was about a year old, a year and a half old when I joined. And we spun out of a larger entity called Pequot Ventures and became Firstmark Capital, really to focus on tech software, internet, and what we thought was going to be a burgeoning New York tech scene. And it was a very prescient idea that the partners at my firm had, and since has been proven largely true here in New York, and it seems like the cool place to be in a lot of ways. But what I realized as thinking about what makes us different and what makes us interesting is that we're a startup too. We're 6 years old. We try new things all the time. We do a lot of things that are ridiculous and that don't work, and I'm happy to share some of those if that's interesting. We do a lot of things that I think make sense. I've passed on things that I'm sure will be multi-hundred-million-dollar companies. We've invested in things that aren't going to work out. And it's probably a good point to, it's funny, I found myself in about 6 of the 12 pitches that I heard this morning asking folks that I thought were far enough along to talk about traction, right? And this magical T word, traction, that VCs always talk about. Talk to me about the metrics. Show me what you've done. And I thought it was only fair to share a couple of our metrics as well, because I think it's one of the things that you should be looking at when you're talking to investors is what is their track record? What have they done? Who have they invested in? How good are they at returning capital to their investors, right? We have a boss too, which is our LPs. So over the last 4.5 years since I've joined, we've made 44 investments. We've experienced 8 exits. A couple more exciting things on the horizon that I can't share yet, but some good stuff happening. Unfortunately, we've shut 3 companies down, but not too bad out of 44, I think. More than 85% of our companies have gone on to raise a follow-on round of financing from another third party, and generally the portfolio is doing great. But on the metrics front, what I was most proud about, coming back to the idea that Firstmark's a startup as well, is that we invest time, dollars, energy, our resources in helping our portfolio be successful, and everyone says that, right? I read an article on PE Hub, and it's funny, it was yesterday. It was basically all VCs are the same. That was the title of the article, or paraphrasing it. And they made some interesting points. But where I think we're really set apart is that over the last couple of years, we've invested more than $500,000 of not investment capital, but firm capital, really in community building efforts for our portfolio, right? So content, community, programming, events, etc. A year and a half to 2 years ago, we hired a gentleman who's our director of community, whose only sole job is to facilitate intra-portfolio communication. So everything as simple as creating a listserv so our CEOs can have a private place to converse about things that they're experiencing, right? Whether those are hiring and firing or sales commission plans or just things aren't going right, right? That's pretty simple to do, but it's really had a huge impact, right? So very simple things on one side. Hiring Dan, our community director, was another, and really over the last year, it was interesting to find out from him that we've hosted more than 55 events for our companies that have been attended by more than 500 of the employees of under the Firstmark umbrella. So we're really proud of what we've been able to achieve, but not just because it's nice to have your employees of your portfolio company show up. It's because they, at the end of those days, come up and say, "Hey, that was fantastic. I learned 3 new things that I've never learned before, and it's going to save me 10 hours of time next week." So that's really been rewarding for me to see, and over the last week to go back and really understand what the data is telling us and how we're doing. And ultimately, I think that's important because your VC should work for you, right? I mean, if you're with the right folks, your incentives should be aligned enough that they should be working for you and making you as successful as you possibly can be, right? If you're successful, they're going to be successful as well.
And on that note, we're going to call time. Thank you, Paul.